Imagine living in a world where profits are almost guaranteed and the term loss is obsolete. But is it really possible to have profits without risk? In this video, we'll explore both the creative mechanisms that have catapulted Tesla to the forefront of innovation and the financial strategy that appears to be designed specifically to fit Tesla's ascent. From Elon Musk's bold vision to the cutting-edge technology that is reshaping industries, each piece of the puzzle holds a clue to our ultimate goal, unlocking profits like never before. If you've ever imagined yourself riding the wave of Tesla's success with an unwavering guarantee of gains, this video is your ticket. If you've ever wondered how to have your cake and eat it too in the world of finance, get ready to be astounded, educated, and inspired as we journey through the realms of Tesla profits and a risk-averse strategy that might just rewrite the rules of investing. But first things first, hit that like button and smash that subscribe button to get updates from Tesla Insights. With that said, we can now continue the video. So picture this: you've got a 10-year on Tesla, and the chances of not making money during that time, well, it's about as rare as a unicorn sighting. Betting on Tesla not growing substantially over the next 10 years is like thinking you'll find a mermaid in your bathtub. It's just not going to happen unless some unexpected cosmic event reshapes the financial landscape. Now, let's address the elephant in the room. Can we say the chances of losing money are absolutely zero? Just consider this: even though the odds of a world-altering war targeting Tesla factories are pretty much on par with pigs flying, it's not entirely impossible. Yet I'd need a crystal ball to predict that scenario. But you know what they say never. While we are extremely optimistic, we are not quite ready to place a 0% guarantee on it. Hold on, there's more, our friend. When it comes to math and probabilities, we are all about those digits. It's like saying you're 100 sure it won't rain tomorrow when there's a chance you might just need that umbrella. Tom makes a valid point when he says he's fairly certain that Tesla's stock price won't drop below its current level. You are, however, being extremely cautious, and even your conservative is difficult to understand because it's a realistic model that's in the middle, and you're really trying to temper your optimism with the optimistic model, which is why I find this appealing. A lot of the time, this gives me the impression that this is kind of the floor, but you seem really bullish when you say things like, this is a certainty that these things will happen. I believe the reason you're able to say that is because even when you consider all the possible negative outcomes, things still work out rather well for the time being. Camp Tom's circumspect optimism is understandable. Herbert, on the other hand, seems to think Tom's conservative is the new definition of restraint. He's more like the Gandalf of the stock market, standing on the firm ground of the middle road and casting out any unwarranted negativity. Even if things do go a bit haywire, imagine Tesla facing a robot uprising or getting a flat tire on the self-driving highway. The odds of it sinking to oblivion seem pretty slim. We're talking about a company that can still rise above the storm clouds even when a few raindrops fall. And let's not forget the naysayers when Tesla stock did before. Some folks were passing up opportunities like they were giving away free ice cream, but hindsight's 20/20, and those who hesitated might have missed out on the scoop of a lifetime. So the real problem isn't whether Tesla's stock will take another dip, it's more about where it'll spring from. Could it be a solid bounce from $500 or a soaring leap from $1,000 per share? Now here's the scoop: we're all in when it comes to putting my hard-earned cash to good use. We mean who knows when lightning will strike twice right. If we spot an opportunity that screams potential 10x gains in the next decade, we're all ears. Plus the risk of my wallet shedding tears is less than 1% sure. You might ask when the next golden ticket will flutter into view. Honestly, it's a puzzle. It's like a steady-paced marathon where your wallet casually strolls along, doubling up every decade. Nice, but not quite the fireworks we're looking for. Now, let's look over our shoulder and remember that recent episode in the SP 500 saga. Yeah, there was a blip where folks holding on for dear life for a decade ended up with a bit less than they bargained for. Not cool, right? So why dance with the devil and possibly clip your wings? Why Tesla stocks are my favorite is because they're like the best guardian angel for your investment aspirations. Of course, let's not overlook our distinct financial wisdom, colors, and tastes. What fits like a glove for me might be too big or little for you, or perhaps you're not ready for the Tesla thrill ride. That's good. The most important thing in this investment galaxy is to focus on your goals and risk tolerance. Just a little interesting information as of right now: Tesla has 42 institutional investors, which is like having the cool kids show up to the party a little late. And you guessed it, this isn't even the top of institutional ownership. So when those investors completely embrace the Tesla love, get ready for some exciting changes in the stock price. Take Apple, for example, which has been trading around the $60 mark. This gives institutional investors plenty of room to buy more Tesla stock right now. However, Tesla's pricing doesn't exactly match the norm, as you can see from the valuation figures. Comparing apples with oranges is analogous. Apple has a price-to-sales ratio of 45 and a PE ratio of about 240. Meanwhile, Tesla's valuation is in a different league altogether, but here's the kicker: folks have a tough time pegging Tesla as an AR play, mainly because they're known for building cars. Wrapping their heads around Tesla as both a car manufacturer and an AR player is like trying to pat your head while rubbing your belly. It's a challenge. Now let's talk about why. Tesla doesn't exactly share the same valuation enthusiasm as an AR-focused company. Historically, institutional investors have had their reservations about Tesla. They prefer companies that do share buybacks and have solid succession plans, but Tesla doesn't quite play by that rule book, and you know what I'm with Elon on this. Why waste precious capital on buybacks when there are better ways to utilize it? And let's not forget the key man: risk. Yeah, that's like putting all your eggs in one Elon-shaped basket, but for many of us Tesla aficionados, that's a risk we're willing to embrace. Now let's play the long game. When Tesla starts reaping the rewards of its moonshots like awe and full self-driving, it's like opening a treasure chest of opportunities. When those juicy profits start flowing in, even the most skeptical institutional investors won't be able to resist jumping on the Tesla train. And guess what? By then, saying full self-driving won't make money will sound as outdated as a floppy disk when people realize that Tesla is more than just hype and is a legitimate electric vehicle manufacturer. It's like a magical moment. Let's face it, Tesla has been like a roller coaster with heart-stopping drops followed by breathtaking climbs. Remember when they said that Tesla shouldn't try mass-market vehicles or that a bigger Model 3 would eat its siblings? Jim Cramer's comment: don't even rent Tesla stock made headlines. However, Tesla actually makes cars that work really well. Yes.as history has shown us Tesla's surprises tend to make the skeptics eat their words. It's like a thrilling movie plot that keeps us guessing, and we are all in for the ride. As we wrap up, remember that everyone's investing journey is unique, depending on your goals, circumstances, and risk tolerance. Turns out people loved it, and Tesla's stock soared along with their electric vehicles, rising 100% in a single day. It makes you wonder if there is stock market magic at work. Finally, we had a laugh at a new car that is rated for only 200 miles with an 82 kWh. We've covered everything, but the constantly shifting stock market shouldn't be overlooked. And guess what? The next time won't be different. That's it, folks. We've dug deep into the Tesla universe and unpacked some fascinating insights. Now that we've defined our path, whether you're a die-hard Tesla fan like us or you're charting your course, I'm curious how all this excitement about Tesla resonates with you. Are you eager to get on board, or are you hesitant? Perhaps you're already in the driver's seat, watching those electric dreams unfold. Let's keep the conversation going in the comments section below. Share your thoughts on Tesla's journey, its potential, or any questions that surfaced during our chat. If you found this video as enlightening as we did, a thumbs up would be fantastic. And hey, if you haven't already, subscribe to Tesla Insights for more. Thank you for watching, and see you.